Millions await today's crypto buyers as the crypto market breaks out of an 8-month trading range. Now, usually when we see something like this, it means one thing, and that's trend continuation. So if you have a look at the Banter Bubbles charts over here, you can see an absolute sea of green with coins putting in massive gains over the last week, up in the regions of 70%, 40%, 67%, 86%, 100% over here. And everything is absolutely pumping and starting to break out. I know many people may be wondering though, will there be a pullback? In today's show, we're going to have a look at the levels of interest where there would be a pullback to, and if we do get that, where you should be layering your bids and which are the best coins to be getting into for the next phase of the crypto cycle. So smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. We are one of the fastest growing channels in the entire world with more than 1 million subscribers. I've personally invested in over 100 different crypto projects. My portfolio is actually around 100 different coins right now. Any of you can get that in the Whale Room, which is the private Discord. And let's get into it. We're going to address what we're seeing in the markets today. Again, guys, smash the like button. Let's get into it. So first thing, open interest. This shows the level of interest in the markets and whether people are actually backing that with their real money, meaning that they're opening up leveraged positions. And we saw this already a couple of weeks ago as an early warning sign that we're going to go through a major breakout, right, on Bitcoin open interest futures over here, spiking up to new cycle highs. We saw the same thing if you look at Ethereum over here, big spike up leading to the breakout on Ethereum, which is still yet to take out its all-time highs, but open interest spiking above what we saw all the way back in March. We can have a look at Solana as well. And Solana's chart is, of course, one of the most beautiful charts in crypto right now, breaking out as well against Bitcoin, which means for each percentage move up that Bitcoin's doing, Solana's doing more, which means you're getting more bang for your buck currently in Solana. And you can see that's being backed by the speculators in the market because the open interest is also spiking up to new highs. So the question is the volume real? Is the momentum real? Are we going to get continuation? Or is it yet another trap? Are we going to start to see a breakdown in price? Well, according to this, not really, right? If we can just see a couple more weeks of this trending into that $50 to $75 billion mark, this shows that retail are sending money onto the exchanges, depositing onto exchanges, looking to buy into crypto. Now, we all retail. It's just a question of, are you early retail or are you late retail to the party? Well, I would say that the late retail just starting to return, but there will be people that come in late into the market. So there is still opportunity, especially if we continue to see the daily exchange volume continuing to grind towards the upside over here, and we start to get a trending move like we saw all the way back in 2021. This has led to one of the biggest bull markets ever. Now, if we start to trend into that 100 to 150 billion-dollar category or territory over there, that's probably where we need to warrant a little bit of caution when it comes to our positions. I'm going to show you a couple of other charts and metrics and look at some of the warning signs, how long this rally may last, as well as the pullback levels that you can look towards. Because right now we can see the 24-hour liquidation levels. This is the amount of traders getting wrecked, stopped out of positions, flushed out, liquidated, etc. It's sitting at 650 million. Now, this is the highest numbers that we've seen in a very, very long time, possibly even for this entire year, with a lot of those actually coming from the long side, which are highly leveraged market participants coming into the market late and opening big leverage positions to try and make up for the lost at least the lost opportunity since they weren't in the market from lower earlier prices, right? My pro tip to you over here is that when it comes to the rest of this market cycle, I would really encourage you to focus predominantly on trading spot, right? Meaning you're buying the underlying asset only. That comes without any risk of liquidation. Of course, you can lose money due to the normal volatility and fluctuations in the chart going up and down, but you cannot be liquidated. When you're using leverage, this is what reflects over here onto this CoinGlass liquidation data. These are highly leveraged market participants getting flushed out of their positions. And it's not only happening to the longs, right? The shorts are also getting liquidated, constantly trying to short the market. So another pro tip for you, above and beyond, encouraging you to stick to spot trading with very, very minimal, at least minimal trades in leverage. The other pro tip that I'm giving you over here is don't short a strong, powerful, trending market, right? That is the worst thing to do. I would rather you take leverage long positions, which would be violating pro tip number 1, than to violate pro tip number 2, which is shorting an absolute flying bull market. Do not do that, right? Do not do that. If you look at the price over here, you can see Bitcoin pushing over $80,000. We've seen some absolutely massive moves, big volume coming into the market, huge increases as well in the open interest. And there's your 24-hour liquidations up 68% based on what we saw yesterday. So as the market expands, expect there's going to be a lot of that volatility. We'll go over some of the levels where you can possibly gain entries. But if you have a look at this over here on the Binance liquidation heat map, this shows you where the majority of the stops are placed. Now on the lowest time frame, which is a 12-hour look back period over here, you can see that there is quite a lot of liquidity, again, building up on the upper end over there, which means they're violating pro tip number 2, which is don't short a trending market over there, right? Instead, you should be positioned to buy the dips, and you can look towards the lower liquidity levels over here. Now, the market's in a very interesting place, and I'll tell you why. One is because you have all this liquidity below. So if you do get a spike down into that region, that's going to be a buying opportunity. But the reason we're in an interesting place is because a lot of the big traders out there trade the CME chart, the Chicago, Mercantile Exchange. I think that's what it stands for, CME. The futures traders trade on that account, right? Remember, that closes on a Friday afternoon and it opens on a Monday morning, which means over the course of the weekend, when the Bitcoin spot price, which is what trades 24 hours a day, spiked all the way up, it means that anybody that was in a short position on the CME futures chart over Friday and they kept those positions open, they're going to be squeezed today. They're going to be liquidated out of those positions, and it may create one more spike towards the upside. But the other thing to note is with CME charts, you get a gap, right? And the gaps oftentimes get filled. And I'm going to give you the gap levels in just a moment. This will line up with the areas of interest where we're looking at on the 4-hour time frame for potential buy zones. So the question is, are things overheated, right? That's the major question. Are things overheated? Well, if we simply look at the hourly period over here and we analyze what the open interest has done during this short time frame period over here, what we can note or what we can see over here, let's grab a vertical line and let's lock that onto the screen over there as well. What we'll notice over here is currently it's all the way down there, right? So it's all the way down there. BTC price is trading up higher. When you look at this time period over here, the open interest spiked up higher while Bitcoin was pushing into those new highs, attempting to break out. And then that open interest got flushed, but the price did not get flushed. And the reason for that is because a lot of spot buyers are stepping into the market, which therefore creates the opportunity for the leverage traders to possibly reopen longs over here, and that could cascade price higher, especially if those CME traders have to flip from getting liquidated short or being in their short positions, and they need to start to cover those positions when the CME futures opens up later today, and they have to flip rather into the long side. Essentially, by covering their short positions, it automatically means they're flipping onto the long end, and that could create that one more spike towards the upside. So a lot to look at, but there are always risk factors at hand, right? One of the risk factors that I'm eyeing out over here is the drop in USDT dominance. Now, there's significance to this chart because if you correlate this chart and you have to overlay Bitcoin price, what you'll actually find is that at each of these points where we hit this trend line over here, you ended up putting in major local tops, right? The last one where we hit this trend line over here was where Bitcoin went to $74,000 and then bled out all the way back down slightly below $50,000. Give or take, it hit that $49,000 territory. Now, we're coming back into this area, right? We're coming back into this area, but the trend is your friend until the end of the trend. The trend on Bitcoin is the most important thing to chart, right? These are, these are secondary measures or things that we can look at when it comes to trading. So at the end of the day, if this does break down and you do something like that, and you actually break this long-term uptrend that we've had on the USDT dominance, this would be absolutely enormous for the crypto market. But as professional traders, we always need to look towards the potential risks. And one of the potential risks is that you hit this line over here and you lead into a massive bounce. If you do lead into that massive bounce, that may create a local top on Bitcoin, possibly around that $85,000, $86,000, $87,000 territory. And then you may go in for a shorter term pullback. I'm going to give you the pullback levels as well on the low time frame, and then we'll get into the rest of the show looking at timing factors for how long this bull market could potentially go go on for. Now, the one thing that I'm looking at over here is anytime that you see a long-standing trend line like this, governing price towards the upside, the more likely it is that eventually you're going to break through that and you're going to sweep down. And this builds up liquidity, right? This is pent up liquidity in the form of stop losses underneath that are busy being trailed all the way up. So that means that the liquidity right now is larger underneath price than what it is above, right? Although there are some people that are trying to head short over here, which in a trending move could spike price into that, with price capturing that liquidity. The reality is that there is definitely more liquidity, which is situated slightly below. And we also had this abnormal candle, inefficiency candle, which then created the fair value gap that's coming into this area. The other thing that I'm looking at is the Fibonacci levels, which we're currently tracking from the low to the high. And typically in these strong trending bull runs, you tend to see price pull back. When it does pull back, it pulls back into the 0.382 fib level. That's known as your bull fib, and that's typically where you find some support. Now, those levels are coming in at $76,000. Also, just below that, you have your 0.5 level, as well as the 200 EMA on the 1 hour time frame. I typically track on the 4 hour time frame, but when the market starts to move as aggressively as it is now, I prefer to get a more precise level to focus on, which is why I zoom in onto the hourly time frame, and you can see this is going to be a big area of interest. So if you do happen to see a flush today, which is going to largely depend on what happens with these CME traders, either they're going to add to their position, looking to add to their short position, some of them, at which point you could pull price down slightly to fill some of these gaps, as well as in the CME market. We can have a look at that. This will be your gap in the CME market. There it is. You can see the big missing empty space over here, and it lines up with a very, very similar area. So layering your bids into this zone does make technical sense. That's coming down to about the bottom of the gap to close it completely would be 77,000. Let's go back onto our other chart over here and just correlate to see where that is. On this chart over here, our high probability zone is 76,200. So I would say between $76,000 and $77,000, you can probably layer some orders over there in the event that price pulls back. Now, remember, in these bull markets, it becomes harder and harder to gauge where price is going to go because the emotions become more and more intense, and consequently, to have an edge, you really need to zoom out and focus more on the high time frames, right? This is part of the reason why we established our positions all the way down when Bitcoin was at $16,500 to about $17,000. Now we're in a power position where we have the opportunity to just decide where we're taking profits. Are we going to take profits here, or are we going to wait for much higher? Well, the short of it is that I'm waiting for much higher, and I'll show you why in just a minute, right? I also want to see what happens later on today with the ETF inflows, right? Now, every time that we've seen big spikes in the ETF inflows, in this case, it was one of the biggest that we've ever seen, 1.36 billion, of which BlackRock was the majority buyer of those ETFs, or at least settled the majority of those ETFs over there, and their customers were the buyers of those ETFs. This has typically led to local tops within the market, but I think that this time you're probably going to see trend continuation over here, and I think that the FOMO is going to be real within the market as price breaks out into new all-time highs, hitting that major psychological level of $80,000, and more specifically closing above that level. Because of that, I think it's going to capture huge attention within the true normies in the space, the normies that tend to focus on buying ETFs, the old school generation, and these guys are most likely to start to jump in, which will probably push the inflows into the ETFs even higher. So we'll gauge that to see if it's in alignment with this volume trending towards the upside, and we do get continuation of that, right? If we do get continuation of that, the next thing that we need to focus on is how long is this rally going to last, right? Now, if you look at the price cycles, we've got the 2020, 2023, and 2024. This is typically what we've seen leading into those various different phases, phase 1, 2, and 3. We have September, November, and leading into December. What we historically saw is November puts in one of the biggest pumps, and then you tend to put in a little bit of a pullback towards the end of November, and then spike further up in December. So how long is this all going to last, right? How long is this cycle going to last? Well, we know that I've looked at this a whole lot over the course of the last couple of years. I know that there's going to be a lot of new people over here, so I'll probably just reiterate it very, very briefly for those that are new. Let me know in the comments, by the way, if you are new, if you're somebody that recently just discovered the channel. Well, what we've looked at in terms of an objective measure, we can use 2 anchor points when it comes to objective measures, and we've done it both ways, right? One way is that we can anchor using the cycle bottom, right? You can use the exact cycle bottom of each cycle as an anchor point, and then you can measure towards where the all-time high was and assess how long it took for price to get there. The other objective measure is that you can use the yellow lines over here, which is essentially your halving cycle, right? Remember, Bitcoin is mathematically programmed to divide its mining reward in two. Remember, supercomputers have to compete to solve complex equations to figure out at least what the equation would be. And when you solve that equation every 10 minutes, that supercomputer is rewarded with Bitcoin for solving that problem, right? And this mining reward gets divided into every 4 years mathematically. Now, that's the second anchor point that we can utilize. When we use that as an anchor point and we measure forward to where the all-time high was, we can start to do some pattern recognition, and we can see where it's most likely to top out the next time. And the reason why is because psychology over thousands and thousands of years remains unchanged. And this is why these patterns within markets tend to repeat over and over again, and why they become so predictable. Now, what we can deduce from this information over here is when we look at the halving cycle to the first all-time high, it took exactly 12 bars, which was 12 months, right? I'm on a monthly scale over here. The second one, from the halving cycle into the all-time high over here, took 16 bars, right? So 16 months over there. The next one from halving cycle to all-time high took exactly, let's just quickly see this one, make sure that we have it correct. This one took, oh wait, we have the wrong thing over there. There it is. This one took 17, right? So again, we have 12, 16, and we have 17. So we can make the at least assumption, right? And we don't want to make an ass out of you and me. We know what assume means, right? But we can make the assumption over here that it's going to top out anywhere between 12 and 17, possibly 18 months, right? Because if it's 12, 16, 17, maybe this one's a right translated cycle that goes on a little bit longer, and we end in the 18-month time period. Well, if we use that as our premise, this is what we can see, right? This is what we can discover. Taken from the halving cycle over here, and we run it to the right-hand side, that's your 12-month mark. It's coming in on the 1st of May. If you go to the previous one, which was 16 bars, that's going to take you to the 1st of September. And if we go for the 17, that's going to be the 1st of October. And of course, if the cycles get longer and longer, 18 bars is going to take you to November. But we're going to zoom in a little bit more. We're going to have a look at the lower time frames like the weekly, and I'll show you it all depends also on how fast price is moving towards the upside and why there's a possibility that in this cycle you could top out sooner, right? This is unless there's going to be major pullbacks along the way to reset. But if we continue at the momentum that we've been putting in recently, things are moving very, very fast, right? Things are moving really, really quick. So what I looked at over here is, again, looking at the halving cycle and the point in time when the market starts to go parabolic. We have two data points that we can use, which is, of course, not a longitudinal study by any means, but it's still interesting, right? The point at which the market cycle started to break above the previous all-time highs following that halving event, this is taken from the 2017 cycle. The parabolic advancement lasted for 4 months, right? 4 months over there. Let's go to the next one over here. When we go to the next cycle over here, we saw the same thing, right? When you measure around that halving cycle, post-halving, price grinds up, starts to take out the all-time highs. And when that markup phase begins, it lasts 4 months, right? So what if we're in a similar phase right now and we start to measure out from this point in time and we say that, this is the start of the breakout? Where would 4 months take you? Well, 4 months would take you to the 1st of March, which is not that far off from the lower end timing target that we have at the 1st of April, right? So maybe, if you put in a local top over there and you start to pull back, then you can reset the count, and then you can probably go on to finish a longer cycle, which would then, as we said, be the 1st of October. Point being, is you probably want to consider taking some profits towards the end of that 3rd to 4th month over there, just to be safe. So have I taken any profits yet? Absolutely not. If anything, I've just recently, just before this pump started to take place, fully allocated and added any spare capital that I had into the market. So you are late, but you're not too late. There is still opportunities within the market, especially when we take a look at the altcoin sector. You should see rapid expansion over there. So remember, we also have the luxury of being able to work out the measured moves from this cup and handle formation would take you into approximately that $110,000 to $120,000 territory. And remember, what we also had a look at previously was if we are following that trajectory, and it's going to be about 3 to 4 months, and we compare to the price cycle, well, we can see that that price cycle takes us as well to the 2.618 fib extension, which is coming in at 113,000. Now, if you tune into the show at 113,000 and we ask the same question, are you too late? I'm going to say yes, you're too late, right? You're almost too late, but you're not too late if you were just joining. So let's continue. Another warning sign that we can have a look at, which will help us to discover the timing aspects of this market. And I actually just dropped this in the Whale Room chat for our members that are part of the Whale Room group. If you go in here, I drop all the different trades that I'm taking live, as well as giving the updates. So you can see just before the show, I also updated them on that, as well as a bunch of other things. Now, what this shows you is the funding rate heat map, right? The funding rate heat map, when it starts to get into those oranges and yellows, usually it doesn't last very long, and it does lead to those parabolic advancements, right? Typically, when you see this kind of a metric, your expectations can be in the region of about, anywhere between 4 and 8 weeks before you're going to find some sort of a local top and a major pullback, right? Which might mean the rest of November, possibly part of December, but anywhere towards the end of November, you should be looking for a major pullback within the market, right? You can see it over here. We got a little period over here that was in January, and then we got the pullback, and then we led into one more massive up period over January, February, March, therefore lasting for 3 months, right? So this is just the start, just the start. It lines up with, again, the timing factors that we're looking at over here. If it plays out into the 4-month period, which is what we previously saw over there, then you know what that means, right? Then you're, of course, looking for somewhere around March for a major local top to be formed. So a lot to consider. You can see if you go also into the Whale Room over here and you have a look at the cumulative deltas, the cumulative volume deltas. This shows you the short-term traders' interest within the market. Well, most of these are currently longs within the market, with all of them flipping green, right? Pretty much every single major coin over there flipping with extreme green on those deltas. So something to be cognizant of. At the end of the day, price is trading into this bullish control zone, which it did all these prior times. And each of these prior times led into those parabolic advancements, right? If you focus on specifically the stochastic RSI as it moves into these pink zones over here, you can see what price does, right? Price moves up, price moves up. Here you have the next one over there. Price moves up into this phase. This one over here, price moves up over here. This was all the way back down when Bitcoin was trading around that $20,000 level. Price moved up to $32,000. We had it again over here from $26,000 with price pushing up into the 74K high. And once again, we're crossing that all-important chasm, right? Moving into the bullish control zone. It's looking really, really good over there. As long as bulls can keep defending this, that should bode really, really well. And then even on the high time frames, if we go into the monthly, you can see the monthly is also starting to cross back towards the upside, and it's rejecting from the 50% level, which is exactly what you would expect. We saw this in the prior parts of the cycle, just pre-parabola, right? Pre-parabola, this was 2020. If we zoom out over there, 2020, you get the flush, it comes down into the 50% level, rejects off that zone and starts to rip. So a lot lining up to show that this is the parabolic advancement, and we have to take it as it comes, which is why I encourage you to join a strong community, right? Subscribe to this channel, watch the show each and every single day. I'll be here every single day, maybe not on Sundays, but Monday to Saturday, I'll be here throughout the bull run, and we're going to exit right at the top, just like we exited the last time at the top, and we bought at the bottom, right? So stay tuned until the end. Since it's a trend in motion, one of the most important things that you can look at is that trend. And the easy way to govern that trend is using 3 very simple moving averages. I have the 3, the 9, and the 30 moving average. And all of these are postured in a very, very bullish fashion, with the price above the shortest moving average being the yellow one, which is angled upwards as well. That's a key point. That one's angled, or it's at least situated above the midterm one, which is the green one. And that one's also angled above the purple one. And the beauty of all of that is the purple one is starting to get that upward posturing, right? Which is very, very healthy. Now, this is not to say that you will not get pullbacks along the way. You could even see today's price action go down into those key target zones that we outlined, back testing that short-term 3 moving average on the 5-day time frame, and then immediately having trend continuation into the $90,000 territory later on this week, which is why rule number 1, at least, or pro tip number 1, it's not a rule, but pro tip number 1 is avoid leverage where you can, right? Especially if you're somebody that's only just coming into the market. And if you are trading with leverage, utilize a very small amount of your capital for those leverage trades. All of this is being supported by the Bollinger Band with percentile, which is a volatility indicator showing that everything looks good for continuation. Now, what's interesting about the timing factors of what I've given you, where I suggested that, approximately 4 months, give or take, you could start to see a top, because this is truly the parabolic advancement. What would negate that? Well, of course, if you do push up towards maybe, like 80, 90, or excuse me, already 80,000, I mean to say like 88, $98,000 territory, and then we start to pause there and put in a slow and controlled pullback, then you could recalibrate and regain momentum to probably push up later on in the year. But what's so interesting about this analysis is when we look at this, we did study the prior cycles and the way price reacted at these various different zones. And maybe I should just bring this up over here to show you very quickly. Let me bring that up over here. Okay, just to make the point. So we've already marked this off on the chart. And what we noticed over here is if we compare this cycle, which is in purple, to cycle 4 and cycle 3, which are the most similar cycles, and at least there's a bit of maturity in the market as per when we compare to the other cycles, which are very, very low market caps within crypto. What we can see is everything's following exactly according to plan. What we can also see is that you get a rapid markup over here, and you find a local top typically around day number 850. This is measured from the cycle low. Remember, I said you can measure the cycle from 2 points. Cycle low, or you can measure it from the halving cycle as objective measures for where price is going. Now, 850 days in, this is what we saw the last time. That is where we tended to put in a local top and lead into a pullback. At the end of the day, whether it's a cycle top at that point in time or just a major top, you can probably expect a deep pullback, possibly even in the region of 40 to 50% for Bitcoin. And that becomes your last buy opportunity. And remember, in terms of Elliott waves, we're in a wave 3 of a wave 3. And then you lead into the wave 4 corrective phase, which could occur over there. And then finally finish off with wave 5, right? So some profit taking could probably occur 4 months in if we continue at this trajectory. And I actually marked it off over here with the, at least this vertical line running down the screen. Now, we said 850 days since the cycle low. Be careful. This is where the price cycles have stalled out. So let's play a little bit of a speculative game over here, since this is what markets are. Markets are speculation. Maybe you see something like this, right? Let's grab our little tool. Maybe you see small, shallow dips along the way, and you just continue to grind up. You do something like this, all the way into the top. Maybe we push up into that, $100,000, $110,000 region, meeting the measured move of the inverse, or meeting the measured move, not the inverse, but the cup and handle formation, which that is the intended target between that 110 and 120, right? Maybe we see something like that. And then it's a sell in May and go away scenario where there's profit taking, right? Leading into May, sell in May, go away, we have profit taking. Maybe we come all the way back down. I think I'm going to screenshot this in a couple of months, because I'm probably going to have predicted this accurately, but we pull back into the prior range high, something like that, right? Leave everybody behind. FOMO comes into the market, come back, pull into that zone over there, and then we load up one more time for the final peak, which who knows how high that goes, right? Maybe it looks similar to 2021 with a slightly higher peak again, and that would be 1,060 bars since the cycle bottom, and that comes in October 2025, right? October 2025. And therefore it would look like this, right? There it is, exactly like before. Why should we think that it's going to be any different? Of course, we always plan for it. We always have invalidations, but most likely it's going to play out exactly like before, as it has always been the case, right? So that's more or less the plan of action. Open-minded, depending on how fast we go up over here. If price does something like this, we're trading at near $200,000 by March, you better bet that I'll be selling every single one of my cryptos, right? Everything, including all my Bitcoin, I'll be fully out of the market at that point in time. So food for thought, a lot to consider. We have this as a strong fair value gap, a strong pullback level. This is going to be a high time frame area that must be defended. Again, even if it comes much later after March and you pull back into May, June of next year, that's going to be an all-important area. Mark that off on your charts. The range high breakout level at $72,000 to $73,000. Okay, key points over there. We're still above the 9 and 18 exponential moving average. Trend continuation. All of it's looking good. The other interesting thing that we can consider over here is if you have a look at the total cryptocurrency market cap and we run this line across here, this is known as a neckline of a common pattern that we've seen a lot in this cycle, not only for crypto, but for stocks as well as commodities, gold, right? You've got the cup and handle formation over there. Perfect cup and handle. It has a measured move, so we can also come with some level of predictability of where price may go next, right? And there it is. That's the bottom of the cup. That goes to the neckline, which is the top side of the cup. It's a little bit of a lopsided cup, but nevertheless, there is your breakout, right? What's interesting about this, if we have a look at that breakout level, this will take you to the 2.618 fib extension, which is coming in at 4.388 trillion. Now, I'm just going to again play a game of speculation and say that, if we do play things out like this, maybe that's what you tend to see. Maybe you see price run from here all the way up into the highs in March and the total cryptocurrency market cap tops out at that 2.618. And then you lead into a deeper pullback, reload it, and eventually finish off the cycle with the market cap in the $8 to $12 trillion level, right? So this is planning ahead. Pretty extensive show. If you appreciate the information, guys, take 1 second out of your day, smash the like button. The other thing that I'd ask you to do for me as a favor is, since this is a more high time frame show up until this very point in time, and it's all relevant for the entire cycle, send this to 2 or 3 of your friends so that they don't get wrecked, right? At the end of the day, I truly do want to help people succeed in the market. And you can't lose by helping them succeed, right? We tend to counter what the masses are doing, but this is not the way the masses think, which means helping just a couple of people here and there to navigate the market correctly is going to go a long way in their lives, right? It's only if I was influencing, of course, hundreds of millions of people, then probably it doesn't work out according to plan because everybody is looking at the same thing. Right now, that's not the case, right? That's not the case. If you want to learn more as well, take your trading to the next level. Join into Whale Room, which is the private Discord. There is another option over here for a 3-month. It's just not displaying on here, but if you click the link, you should be able to find it, or you can just contact one of the moderators. But sign up, you're getting 42% off a yearly membership. And if the cycle goes on for approximately 1 more year, this is going to be a great return on investment for you, a very small investment to keep you up to date with some of the top analysis and traders in the world, right? A lot of the information that I'm utilizing costs me thousands of dollars per month. And I'm aggregating that into one easy to use place for you guys to use, right? Like this, right? Institutional charts. All of these products are very, very expensive and you get that for free, right? Let's continue. So we can see everything is playing out just like before, which is why I said that, we can play this speculative game when we look at things like this. Everything seems to be playing out like before, and therefore, this is the expectation. The altcoins are probably going to start to move, right? People are going to move towards the laggards where there's more meat left on the bone. And we can see just recently, the bottom chart over here, you got that super guppy starting to turn green for the very, very first time following this big candle that moved up, right? Whereas the rest of them, we had Bitcoin, total cryptocurrency, total 3 over here. All of those have already been in trend continuation with green super guppy indicators. Right now on the weekly time frame, you're only just getting green on others, which shows you're not too late, right? There is opportunity. Also, we don't even yet have a confirmed breakdown of the Bitcoin dominance. We got a bearish engulfing candle. If you get 2 more red candles over here on the weekly scale, that's going to be incredibly telling, and you're going to be looking for a massive shift into the altcoin sector in terms of Bitcoin rotating out, right? So bearish engulfing candle. Let's observe what happens with this weekly candle. You haven't left the rising wedge pattern over here, but you currently look like you're rejecting from the range highs, which we had marked out already months ahead of time, right? So coming up to that order block over there, let's pay attention. Very, very important. What could ruin this party? We always have to talk about what could ruin this party. Of course, the USDT dominance bouncing hard from this level over here probably leads to a big pullback within the altcoin sector. And consequently, that might lead to Bitcoin dominance spiking 1 more time. Ask yourself, is this an uptrend or a downtrend? The simple answer is, despite the possible signs of reversal over here, this is still an uptrend. Okay, Bitcoin dominance is still in an uptrend over there until we start to take out some of these lower levels, which are going to be coming in. I think the first, major sign of weakness is going to be when Bitcoin dominance starts to break below 57.78%. Then you can say maybe that's the start of the new downtrend for Bitcoin dominance. And then altcoins should absolutely fly, right? We also don't have full confirmation of the ETH-BTC reversal yet, but it's coming very, very, very close over there. Big move up over here on ETH-USD on the right-hand side. And let's get into the altcoins, right? So that's your high time frame analysis for those of you that wanted that. Clip that, send it to your friends, send it to your family. Don't make them buy the top. Should have sent it to them long ago because we were in the market for ages. But anyways, let's get into it. Guys. Let's get into the altcoin request. In tomorrow's show, we'll focus a little bit more on what the stock markets are doing and see, is there going to be trend continuation there? Just looking on my other screens on the right-hand side, which you guys can't see, it looks bullish. Very, very powerful from the stock markets. Huge moves over there. So altcoins, yesterday I went through a whole lot, gave opportunities over there, which you can get into. You can see the AI sector over here. We have Aether currently breaking back into the trading range. So this is a little bit of a lagging sector that might get rotation into at some point. Octa, also big move up over there, coming into support with this trend line over here, possible deviation. And we'll see if this gets continuation. Okay, any other ones to look at? EOS, a little bit of a pullback over here. Now, when you are trying to gauge the pullbacks, remember, they're very, very shallow in a bull run. But what you can do is, again, you can always mark out those levels. Let's just grab our FIB tool. You can always mark out those levels from the local low to the confirmed high. And then you want to go to that bull fib, right? The bull fib is going to be the 0.382 to the 0.5. So 48 to 46 cents for EOS network. That's going to be a decent zone where you're looking for a potential buy. Another one to look at over here is AITECH, which is still slightly lagging, but it is forming high highs and high lows over here, following a very, very strong downtrend into the strong horizontal. One of the laggards, put on your watch list over there. But at the end of the day, if this one does start to bounce, it has a strong fundamental factor, which is that they're loading out their GPU power to all of the other AI projects with physical databases on the ground. So it's a real world project, kind of can fit between AI and real world assets. It's a real world project. Keep this one on your watch list over there. Another one to look at is Render. I recently just entered long on Render. I took a couple of positions over there. I dropped them into Whale Room this morning. We're already long on this a few days ago, since probably around this $495 region on spot. We started to add into the leverage long there as well. So Render's looking pretty decent over there. We've taken a lot of these trades over here, right? If you go through onto this over here, here's the Render trade, currently up 11% over there. We're in the near trade as well, which was also dropped in Whale Room, up 88% over there. TON, we also just entered into, only up 6%. So still an opportunity probably if you want to get in on that. Bitcoin up 149%, Phantom up 70%, WIF up 89% over here. So the trades are looking really good. Remember, the trades over here have been taken on WEX. These are going to be more the leverage positions, low leverage positions that we're going to hold as a swing trade into the top of this portion of the cycle. Let's just go back over here. So the plan of action is I want to hold that kind of to the point where we find a local top, and then I'll start doing some profit taking in there. This is to help us grow our accounts a whole lot quicker. If you do want to participate in this, by the way, they actually start with a competition today. If you go to the link in the description below on WEX, one of the top exchanges to trade on now in terms of liquidity, they have a sign-up bonus offer where you can get a guaranteed 100 USDT, right? All you have to do is sign up, register, put your phone number in there, put your email in, link those. If you do that, you get 100 USDT. If you do the other tasks over here, you get another 100, 20, 100, 200, 500, and so forth as you complete those tasks. But this money can be used risk-free, right, to take a leverage trade on and then keep that trade open. Any of the profits that you make are yours to keep and withdraw, right? So great opportunity over there. That's Render, right? 𝗕𝗤𝗕𝗏, which is Artificial Super Intelligence Alliance. I'm pretty bullish on this one for the long term as an AI pick. As soon as you start to clear this 151 region and close above here, I think this one, that's kind of the tipping point where you're going to see rapid expansion and it's going to start to move really quickly towards the upside. Okay, 𝗬𝗢, immediate absorption of that small little dip that's occurring. Big level to clear, 684 over there. Okay, Billy seems to be getting a little bit of a move over here. We did load up down around these lows. Big level to clear for Billy, 0.041, right? That's going to be the level to clear on Billy. Other coins, go to yesterday's show. I dropped a whole bunch that are in the zone in terms of the meme coin sectors. Remember these dips when you see something like this, right? 8.69%. It might look scary to anyone that's new, but this is part of the crypto bull run, right? This is normal. You can even see 20, 30% on a red day for the next day, only priced to bounce back 100%. This is why I encourage you, low leverage, long positions. Currently, I'm on cross margin over here. Don't use it unless you know what it means, but cross margin with a bigger account size means very, very unlikely to be liquidated on any of these long positions over here on 𝗥𝗢𝗙𝗏. So very, very strong over there from FOG. Let's see MOG quickly. MOG still pulling back ever so slightly, a little bit of a consolidation over here. I'm still bullish on that for the long run. Resistance dog starting to pick up over here on that chart, not looking too bad. Brett also deviated this range low region at 0.077. Next area of interest is going to be around that 13 cents. If you can break above 13 cents, expect a move to the top side of the trading range. And I'm seeing this repeat, and I believe it will probably happen again and again. And that repeat is, of course, you have these massive cup and handles that are forming, right? You're seeing huge cup and handles forming. And I think a lot of the coins are going to start to play this out, right? And what's interesting is if you line that up, you're looking towards the end of January for the top. And then maybe that's where you lead into a little bit of a pullback to form the handle pot. Okay, let's go into the layer ones. 𝗕𝗬𝗕𝗓 has put in an absolutely enormous move from the lows over here. Look at this. Huge move. 60-ish% of there. So very, very big move over there. I mean, some people are considering this as a deviation of the parallel, right? If you look at it like this, there we go. They're considering this as a deviation of the parallel back into the trading range. I'm more interested in the horizontals because they're more significant. As long as it holds above 14 cents over here, pullbacks into 14 cents means it brings in the 18 cents target. And then eventually we're looking in the medium time frame to get up to 27 cents on 𝗕𝗬𝗕𝗓. So that looks good. NEAR absolutely pumping. We spoke about the buildup of liquidity over here in the form of short traders and eventually going to spike through that level. That's exactly what we're getting. 𝗬𝗎 has also been one of the darling childs. Look at that. I mean, this one's really stealing some of the limelight from Solana recently. Huge moves up. If we look at 𝗬𝗎, from those lows, let's actually compare what has 𝗬𝗎 done from the lows versus Solana recently. From bottom to top, 597%. And let's go to Solana from bottom to top over here. So 590% versus Solana putting in the 94%. So 𝗬𝗎 stealing some of that market share over there. Solana backtesting into the range highs over here, which is a really good zone. You want to see it continue to hold above this 200 to 205 level, and then probably looking for rapid expansion and markups over there. All right, what else? I'll keep you guys up to date as well in Whale Room if there is any new other trade opportunities that come into play. Mantra is one of the strongest real-world asset plays. I'll keep an eye out on this. If you do get a flush and it comes down to this $1.13 region, that's going to be a good area of interest to look at. All right, what else, guys? Drop in the chat. I see there's a couple of requests for 𝗔𝗦𝗓𝗧, so we can have a look at 𝗔𝗦𝗓𝗧. Okay, 𝗔𝗦𝗓𝗧 is still doing decently. Your invalidation is going to be quite far down, but your return opportunity is much higher up, which gives you still a favorable risk to reward ratio, right? In order to, at least when you're tracking this chart over here, your full invalidation is going to be below that 0.01. That's if you want a kind of a more loose stop loss. If you want a very, very tight stop loss, I'd probably go in with my stop over here below those candles at 0.0195. And as long as you keep chopping around and consolidating over here, you should soon start to see rapid expansion. In terms of Bitcoin, I think I actually marked out when I think you'll see things really get moving. And I said over here, the 15th of November. The 15th of November. So at the time when price was pulling back, we said all bulls need to do is survive into the 15th of November, and then you should see momentum shift into that second week. We tend to put in the biggest gains in the third week of November, right? So we're looking over the next 2 weeks for continuation for the market. If you also look at these levels for Bitcoin over here, this is why this is a critical and significant level. It's your previous month's high. It's the daily fair value gap. It's the SOS phase from the breakout of the Wyckoff accumulation schematic. And according to that, you wouldn't want to see price break back below that. And it's your previous quarterly high at 69K. So really your critical area is this huge expansive candle, the candle that occurred on the 6th of November in terms of validations and invalidations. You can basically invalidate on your longs if you start to lose the candle that occurred on Wednesday, the 6th of November, which is going to be, it means price has to drop and hold below $69,000. So again, guys, if you want to learn more, about this, just go through over here, even beyond Whale Room. There is Whale School as well, right? Go through to Whale School, click on that. It's completely free for you to join, right? You don't have to pay a cent. It's cohort number 10. I've been privileged enough to put over 80,000 people through this course. What an absolute privilege and honor. It's all of my knowledge and education over there for you. 23 days left to sign up. This is the last cohort for this year. It's cohort number 10. So use the link in the description below. Also take advantage of 𝗥𝗢𝗓𝗓 and then make sure that you do jump into Whale Room. That's where you're going to get the highest alpha. That's it from me today, folks. I'll see you all on the next one. Stay safe out there. Don't over leverage. And I'll catch you on the next one. Have an absolutely stellar day, everyone. And cheers for now.